Paul Cavey, thanks very much indeed for joining us.
Give the government some confidence. Think about the economy more broadly going well for China. And the more interesting story is you look at TSMC.
Hi, I'm Paul Cavey. Welcome to the East Asia Econ YouTube channel. I'm the founder of East Asia Econ. We've known for about 4 or 5 years or so now. And it's a platform for understanding everything that's happening in East Asia. Now, the economies I focus on are China, Japan, Korea, and Taiwan. Basically in that order. That's obviously in terms of order of size, but it's also actually in terms of importance, in terms of interest from investors and people who I have contact with. And essentially what that means is Taiwan is not something where people are putting a lot of their attention. It tends to fall off the global radar. That's partly because of capital controls and it's a difficult market to trade. It's partly because in terms of Taiwan macro, nothing has happened over the course of the last 20 years or so in terms of interest rates or the currency. And I think it's also because Taiwan is not included in a lot of the international databases of economic statistics. And so when people start to do international comparisons about what's happening with different economies and economic development and so on, Taiwan tends to fall off the list. Now, what I'm going to do today is focus on Taiwan. So I realize it's probably going to be a bit of a niche audience, but I would ask you to kind of bear with me because I think Taiwan has a claim to be the most interesting economic story in the world at the moment. I'm going to go the reasons for that and then think about some of the implications of what that might be if it is true. Now, before I get on to that, I have 3 requests from people watching the video. The first is if you find this interesting, even frankly, if you find it boring, then please do recommend it to people you know, to friends and to colleagues who might find some of the content interesting. I'm talking about Taiwan today, but we talk about a lot of the economies in the region as well. The second thing is, if you'll find this interesting, then again, please check out our website, eastasiaecon.com. On that, you'll find a huge amount of information about the economies of the region. We have a data API which has 700,000, I think, different data series. We have a lot of interactive charts. We have some visualizations, and all of that is available for, if you're interested to become a retail subscriber to the site. The final thing is if you're a professional investor, then please get in touch with me directly and thinking about subscribing to our sort of focused service for professional investors. So we have a huge amount of information we're doing every day in terms of close analysis of the cycles in Asia, thinking about what the structural changes are happening with these economies and what the market implications of that might be. Now, again, that's really the kind of the bread and butter and what I'm focused on. And so if that interests you as well, then please get in touch with me directly. Now, with all of that, again, on with the show. What I want to talk about today is Taiwan. Again, it's a bit of a niche offering, I think. But I think it is a very interesting economic story at the moment. And I'm going to go through the reasons for that and what the implications might be. And I talk about it basically, I think, in 6 parts or thereabouts. So the first thing is to talk about basically the big picture. And this idea that I have that I think is true, that Taiwan right now is really heading into uncharted economic waters. And I have 3 charts to kind of illustrate this point. So the first is, it's basically, and the context to remember for all of this is that Taiwan is now a rich economy. So in terms of PPP US dollar PPP GDP per capita, Taiwan is now has an income per capita which is equivalent to the US. So yeah, it's a rich economy, right? Like it's a developed place, which is often forgotten by, I think, a lot of people living in Taiwan. But it is a rich economy at the moment. Now, what stands out within that? It's because the economy is growing by 8% a year. It grew by 8% last year in real terms. And the forecast for this year, at least before the Iran war, was also a growth this year would be 7 or 8% thereabouts. Like, it's very difficult to find a global example where this has happened before. To have what usually happens as economies become richer is that economic growth slows down and gets down to between 1 or 2% is seen as sort of a good year or something which is quite stable. What's happening in Taiwan is that growth slowed, and in the last 2 to 3 years, it's really accelerated. And 8% is remarkably high for an economy where income per capita is already so strong. The second thing where it stands out is in terms of the manufacturing share of GDP. So why has growth been accelerating? Well, it's all because of exports and exports of semiconductors in particular. Now, that in terms of the economy where it shows up is that manufacturing is now 35% of GDP. Now, again, if you think of what happens usually with rich economies, as economies become more developed, manufacturing falls as a percentage of GDP, services rise. And so if you think about the US or the UK or Japan or any of these richer economies, you tend to see manufacturing being, sometimes even single digits, but certainly around 10% or GDP or thereabouts. Taiwan, similar level of GDP per capita, manufacturing is 35% of GDP. Now, I did a search in the World Bank World Development Indicators. In that, it shows that there's no economy in the world except for Puerto Rico which has a higher ratio of manufacturing to GDP. Again, it's remarkable. It's very difficult to find an example of an economy developing in the way that Taiwan is. So that's the second thing that stands out. The third thing is the current account surplus. Now, I've talked about this before, and it's probably, if there is a focus on Taiwan's economy from global investors and for people interested in markets and economics, it tends to be about the external surplus. And it is enormous, right? Like 25% of GDP in terms of the current account surplus. The trade surplus with the US alone is also about 25% of GDP. So these are remarkably high numbers, again, happening in a situation when, over the course of the last 2 years, Taiwan has consistently run current account surpluses. So this means that the overseas assets of Taiwan, which I think is important for global markets, Taiwan is a huge investor now in global markets because of this current account surplus that the economy runs. And so, like, these things are, the current account surplus may be not unprecedented, but certainly in terms of the growth profile of manufacturing, it's very difficult to find examples in the rest of the world, like historically, where this has happened before. So that's one set of issues. The second set of issues is about what's happened, trying to explain some of these changes and why these things have happened. And I think one of these big things, one of the big trends is Taiwan moving away from, if you like, being associated with China in terms of the economy to being associated with chips. Now, one chart I like is this one, which shows, and people familiar with the US or other economies would have seen versions of this. So it's trying to look at output per capita versus wages per capita. And what you see in Taiwan is from 2005 or thereabouts, before that time, the two lines basically moved together. After 2005, you see a big divergence. What happened in the early 2000s? Well, China joined the WTO, and there was a huge wave of manufacturing that moved from Taiwan into the Chinese economy in terms of moving factories to a cheaper location. That, I think, was the thing that drove down wage growth in Taiwan. And eventually, sort of, you end up with this, if you like, a hollowing out of the domestic economy, that the middle incomes get squashed and so on, that wage growth has to come down. So that was a story from 2005 until 2015. And actually, during that period of time, like, as much as Taiwan growth held up, it wasn't a spectacular economy. Growth wasn't very strong. And there certainly wasn't a feeling of, big consumer confidence in the domestic economy. And what's happened since then, if you look at the most recent data, sort of, since 2020 or so, is that these two lines are now together once again. And so that kind of hollowing out of the domestic economy to China, that episode has now ended. And once again, the economy is starting to do better because you're not seeing that move of manufacturing over to China. So that's something that's changed. Now, the other aspect of this is, obviously that kind of suggests that the drivers of the economy have shifted. Whereas before it was cheap factories locating in China producing, computers and clothing and so on. As this chart shows, the other thing what's happened now is the economy is much more dependent on semiconductors. And semiconductors have been, semiconductor exports have been rising dramatically over the course of the last 5 years or so. And so this is very much the story of TSMC, Taiwan's biggest company. But I did want to focus on one thing in particular, which is what this chart shows, which is looking at semiconductor prices. Now, we know that TSMC is a very successful company and the economy has been doing well as a result. But I think it is important to focus on prices of semiconductors, which were falling for 20 years or basically falling forever, right? Like Moore's law and electronics prices becoming ever cheaper. That was true until 2020. Since 2020, semiconductor prices are generally rising. that then is a very different situation for the economy. And I've talked about this before in other videos. If you think about the terms of trade is different between export prices and import prices. If export prices are declining, it reduces domestic incomes. If export prices are rising relative to import prices, it starts to raise domestic incomes. That's now becoming obvious in Taiwan statistics, that for the first time, the terms of trade is making a positive impact to national income in a way that hasn't been seen since the early 2000s. Again, it's a big shift, and the reason that's happening is because of chips. This final chart, in terms of thinking about the transition of the economy, is the shift away from China towards the US. Now, that's a country shift in terms of both the focus in terms of investment and this massive trade surplus that Taiwan is running with the US. But it's also related to chips, because essentially this is TSMC selling chips to NVIDIA. Now, the result of that is that Taiwan is now, much more closely linked to the US economy than it was, whereas previously the biggest link was to the Chinese economy. So again, there's been these shifts, and for Taiwan's economy, this has been the outcome of this is that it's an economy more dependent on semiconductors, which is definitely being in the right industry at the right time, given what's happening with the AI cycle. So the first thing is trying to, Taiwan's economy into uncharted waters. The second thing is to think about, that transition away from China towards the US in terms of explaining why the economy has been doing so well. The third thing is just think about the cycle a little bit and what's happening with the domestic economy as a result of these changes. Now, obviously, some of this is going to be dependent on what happens with the Iran war. If that starts to have a big impact on global growth, then things will look different. But at least as we stand today, which, in April, it did look like the economy was still doing pretty well. The PMIs have held up, as this chart shows. This is the manufacturing PMI. It's a good sort of snapshot of what's happening in the manufacturing sector. Still looked like it was doing quite well in the early months of this year. If we think of the output gap in Taiwan, so this is the difference between potential growth and actual growth, it's an indication of how tightly capacity utilization is being used in the economy. Because growth has been so ridiculously strong, this suggests that, unlike, say, Korea, where there's a negative output gap, in Taiwan, actual growth was much, much stronger than potential growth. And the impact of that is that actually this means that domestic inflation in Taiwan is now something which should be starting to become an issue for the central bank. So again, if you think about this context I've been talking about, the story of Taiwan over the course of the 20 years before 2020 was essentially an economy which was being hollowing out, where growth wasn't particularly strong, wage growth was declining. And actually, if we look at core inflation in Taiwan, it basically averaged 0% until 2020. There was no inflation in Taiwan. It was the economy in the globe, I think, that was most closest to the Japan's experience of having deflation. Now, because growth has been strong and capacity utilization hasn't been so high, I think what we're seeing now is inflation starting to pick up. So this chart looks at services price inflation in Taiwan, which looks like it's bottomed at around 2% or thereabouts. It's not to say that that rate of inflation is particularly high, but it is higher than Taiwan has had historically. And that matters because when there hasn't been any change in interest rates, for many years in Taiwan, the fact that some inflation starts to be seen on the back of this economic performance that the economy is seeing, that becomes quite important for markets. So the point essentially is that the cycle is doing better. The cycle doing better is being reflected in inflation starting to pick up. Now, the fourth thing is a bit more context of why inflation would be rising in Taiwan. And here there is a contrast between Taiwan and the rest of the region. So all of the economies in the region are having terrible demographics in the sense that, the populations are aging, populations are no longer growing as a result. And if you think about that, that should result in labor shortages, because if the economies are still growing and there's less people, then you start to run into these capacity utilization problems. Now, the reason that isn't being seen in Japan and Korea is because there's been big increases in participation rates, as this chart shows. That over the last 10 years or so, particularly for female workers in both economies, there's been really significant changes. And if more people are entering the working force who weren't working before, that helps to offset the absolute changes in the number of people available to work. So that participation rate offsets the impact of demographics. And as these charts show, then you still see the labor side, the number of people available to work continues to rise. In Taiwan, that's not happening, at least in terms of the official data. Recently, the participation rate has begun to increase a bit, but still it's nothing like we're seeing in these other economies. And yet Taiwan faces the same demographic issues of aging and population growth slowing down. As a result of that, you expect to see labor shortages beginning to appear. And the driver of this, as this chart shows, it's not just because female participation rate is low relative to the rest of the region and hasn't changed very much. It's also because the retirement age, or the effective retirement age of most people, is also quite low. And so there's not the expansion of the labor force and the participation rate that's needed to offset the demographics. Now, where does that show up in the economy? It really shows up in what's happening with wage growth. And as this chart shows, what we're seeing in Taiwan is that the wage growth is now the highest it's been, in 20 years or so. It's about 3% or thereabouts. Now, again, that isn't particularly high. Just as core inflation being around 1.5% or 2% isn't particularly high. But the point about both of these things is this isn't a situation where the economy has been remaining quite strong, where semiconductor exports have been doing quite well. So there's no reason, at least without thinking about the consequences of the Iran war, but there's no reason right now to think that these trends are going to reverse. And in fact, if anything, it's more likely that we see inflation continuing to pick up in Taiwan because the labor market remains tight, and therefore we should expect to see wage growth continue to accelerate further from here. So I think there's a lot of changes happening in Taiwan's economy that it is, from an economic perspective, it's very difficult to think of previous examples of economies growing so quickly when they're already rich. There's reason to think that these trends continue, and that's because so much of it is based now on semiconductors, and semiconductor demand remains strong. And secondly, because there are elements of the domestic economy, particularly labor market dynamics, which suggest that the economy isn't very flexible in this sense. And therefore we see both growth and inflation continuing to pick up. And so where does this leave us in terms of markets? Why is this important for investors? Why should people thinking about it? So I wouldn't argue at all that Taiwan's economy is overheating, but I think there's a strong case that Taiwan's economy continues to warm up. Now that, I think, becomes quite significant because it seems likely to me, if that process continues, the central bank will have to be tightening policy here in Taiwan during the course of 2026. That's likely to come through interest rate changes first. But if the central bank does have to start raising interest rates, then that has implications for the currency in keeping the currency in the band where it's been over the course of the last few years or so. There's one other thing I think is worth highlighting about Taiwan. So that's sort of on the market side. But my argument is essentially, or my thinking about the economy is that there's these very big changes happening. It's very likely that it has market implications. The mechanism for that showing up in the market is inflation rising and the central bank needing to take action. Now, there's obviously perhaps other mechanisms. The other two sort of arguments around this are, one, that it just doesn't matter. You can have all of these huge changes in the economy and there doesn't need to be any market implications of that. And that, I think, is an interesting point of view, and may be true. I find it unlikely, but I think, you can at least argue that. And I think it's stronger to argue that if inflation never changes, which might be possible. The second mechanism that might change things, if, for example, politicians in Taiwan start to focus more on the underpinnings of Taiwan's growth and basically start to say, because we know in elections in Taiwan every time, that there's a lot of dissatisfaction about the level of wage growth, particularly from young people. Now, that dissatisfaction about wage growth is partly because the currency is so undervalued. And so just to finish with one final chart, this is looking at incomes per capita in US dollar terms versus PPP terms. Now, again, in PPP terms, Taiwan is a rich economy, very similar to the US. In US dollar terms, Taiwan is not a rich economy. So US dollar per capita GDP levels are only about 40% of those in the US. Now, perhaps one mechanism that things change in Taiwan from a market perspective is because politicians start to focus on this and say that Taiwanese people essentially aren't earning all the benefits of the exports and the current account surplus that Taiwan is producing. Those export earnings show up in domestic household incomes because the exchange rate appreciates, which gives household purchasing power greater than it would have been otherwise. Now, again, that's another mechanism by which I think things there might be the economic change that Taiwan is seeing start to feed into real implications for markets. But again, that also hasn't been seen. So I think for the time being, the thing I'm focused on is whether growth holds up after the Iran war, whether there's a change in the semiconductor cycle. If neither of those things change, I think it's more likely that Taiwan's economy continues to warm up during the course of 2026, that this huge growth that Taiwan's economy is seeing then does start to mac up the markets, because we start to see interest rate changes. On the back of that, probably then we start to see the exchange rate move as well. Now, again, this is part of the analysis that we do at East Asia Econ. We look at the other economies in the region as well. So China, Japan, and Korea. There's a lot of comparative stuff on the website and other information you can look at. So again, if you're interested, please subscribe to this channel. Check out the website, eastasiaecon.com. Or if you have any questions, then please get in touch with me directly. Thanks very much for watching.